Such amazing price action. The inversion fair value gap traders, model traders, pattern traders, all having an amazing time catching the 30-point trades within this consolidation, right? Beautiful, beautiful, beautiful. Now, for the ones that are watching this and are kind of new, we're going over opening prices, but just a little warning because I am recording this in August. August price action typically is annoying, disobedient, and very, very hard to deal with. So do not be surprised or think you're unprofitable or think you failed because you blew an account in August. It's normal. I advise you to not trade August at all. Okay. Anyway, enough yap yap. Let's go over opening prices. Like I said, opening prices are, it's in the name, opening prices at certain times that can be used and interpreted through the form of power of three, or basically through power of three, meaning there's three opening prices, okay? You have midnight opening price, and remember, whenever I'm referencing to time, talking about New York time right there. See that? See that? Right there. New York time. So when I say midnight, that means midnight New York, which would be right there on that candle. Okay, see that right there? Right there on that candle. So that'll be your midnight opening price. Whatever the opening price is of that candle at midnight or at 12 a.m., that would be your midnight opening price. Then you have 8:30 a.m., which is, an hour before the 9:30 equities open. You can use that as an opening price also. And then the one I don't really use, which is the new week opening price, it can still be used, in which is funny because each opening price actually has a specific time frame it's supposed to be used in. So the new week opening price is used to interpret power of three over the week. The midnight opening price is used to interpret power of three for the entire day of price action. The 8:30 opening price is used to interpret or embed power of three into price action intraday, meaning within less than a day's price action, meaning like a couple hours of price action, an hour of price action, freaking maybe 3 hours of price action. You get what I'm saying? So new week opening price, weekly power of three, midnight opening price, daily power of three, and then 8:30 opening price, intraday power of three. Simple? Okay, just had to explain that to you for the first 2 minutes and 30 seconds of this recording. Now, first, let's go over. Let's do midnight opening price. Why not? We can do that. We can do that first. So we're gonna jump to maybe like the 30 minutes, something like that. No, 15. It'd be better to interpret on the 15. So here is the midnight opening price. See, that's the 12 a.m. candle right there. If you look at the bottom, we're going to get the opening of that candle, drag it all the way across, bang. So that's the opening price right here. Where is it at? Midnight opening. There it is. Midnight opening price right there. Okay. See it right there? Nice, beautiful name, right? Midnight opening price. So, how do you interpret this? Okay. Now, obviously, power of three is what? Accumulation, manipulation, distribution, or if you want to call it expansion, you can call it that too. It's those three. So, obviously, they're going to be in that sequence. Now, does this form or do those stages form at specific times? No, no. But they are just interpreted through specific timed openings. Just simple as that. So, of course, around the midnight opening price when it first opens, you're going to see an accumulation. Does that happen? Yep. And sometimes it can even start before it. It doesn't have to exactly start right after it. It doesn't have to do that. You can see it consolidate, and then the midnight opening price, when it opens up, it'll continue consolidating, which is still an accumulation because it's still in price action. Even without this being here, like let's delete it. Even without that being here, it's still consolidating. Get the point? So it's not necessarily, or it doesn't have to necessarily consolidate just because the midnight opening price is there, or it just opened up. No, it doesn't have to do that. So we have the accumulation. We have the manipulation. Why? Why is this manipulation, JJ? Why? Can you tell us why? Well, let's look. Let's actually look. First of all, the midnight opening price, when it opened, we are engineering what? Sell side. See, we created equal lows, but did not, come and purge any of them. And then below these equal lows, we have the rest of this fair value gap there, in which actually that might be something on the not 4 hour, but the hourly. Yeah, look at that. So below those lows, we have this massive liquidity void. So from here all the way to there would be your liquidity void. So if we apply quadrants, you want to apply quadrants, in which mainly if we're using this as a target or to fill it, you want to be using premium and discount because the equilibrium is the most sensitive point of any PD array. So if you're targeting a PD array, in which the only two PD arrays you can target are volume imbalances and liquidity voids. You cannot target any other PD array. It goes against ICT in general. Do not do that. So if you're targeting a fair value gap and calling it liquidity, first of all, that's wrong because by definition, a fair value gap isn't liquidity. And then second of all, it's wrong because you're just not supposed to target like that. It's literally against ICT. But anyway, going back to the midnight opening price, when midnight opened up, we came down, engineering liquidity, equal lows, and then we have another low right there. See that? Now, up here, is this a intermediate term high? Yeah, that is an intermediate term high. Wow. So we have a short-term swing there, short-term swing there, okay? And then we have this intermediate term high there. So this is a pretty important swing. All right. Now, there's two things that price could have did here. First, we have not even moved. Well, let's see. How far did we move away from it? What, like 100 points? So you could say that we have not moved far away enough from the actual intermediate term swing to drop lower and to exhaust that swing so it can become vulnerable. Or you could say if we want to manipulate higher and really manipulate, in which you can see that as price, reached up into that high, it struggled. It really did struggle. So that's just showing the resistance that this high has, which it is an intermediate term high. I didn't set it as that intermediate term swing. There you go. So we have it accumulating. Engineering sale side. I said sale. That was a very weird sale. But we have some buy side right here. Engineering sell side. Accumulation. Manipulation. It manipulates up into that intermediate term swing, goes up there real slowly. So it's showing that this intermediate term swing is a true intermediate term swing because it's just, look at how it's resisting price. See, it's just resisting. It's not really smoothly going up into it. And then once it reaches up into it, look at all the wicks around here. See that? See how there's not a single body closure above that? That's called respect. That's called algorithmic reference. It's called order flow. See that? See that right there? See, it's just not going above that right there. That's very important. Okay. When you see something like that, that means a lot, like a lot. So just keep that in mind. In which you can see that look at the body closures. They do not even go past that swing. So first of all, we got proved that this was an intermediate term swing just by the resistance. And then second of all, we also proved that this was actually manipulation because look at the price action after it purged this swing. So we can now call this a liquidity purge because it has the willingness to not go past it. Once it shows that, you wait for the 9:30 open, which is a pretty wicked 9:30 opening, I'm not going to lie, in which we opened up and then we what is it called? Distributed. There you go. So in short, you have the accumulation, you have the manipulation right here. Then you have the what? The distribution. Super simple. Now remember, the targets I was talking about before were these engineered lows here, and then the liquidity void below it. Okay. And remember, if there is an imbalance right below or in close proximity to equal lows or just liquidity in general, it's likely that it's going to seek the equilibrium of that imbalance or fill the entire thing, in which obviously it's not going to fill the entire thing because the entire thing is like 300 points. So we're going to be targeting the equilibrium, in which, let's say, I don't know. I'm just going to put like a random entry on the 1 minute and see what RR that would be. This was a pretty rough day, though. I'm not going to lie. I mean, of course, this is in hindsight. We might just take a trade on this just to see how it played out, but probably won't. I want to keep this video short. So we got that intermediate term swing here, liquidity purge, and we have 10 a.m. kicking in right there. We have, was that a propulsion block? No, that's just a regular order block. So we came in. This is a very rough day, honestly. Probably the only trade I would take, in which I don't even use inversion fair value gaps, is probably this inversion right here, just from looking at the displacement and the willingness it had going past it. And then the low that we had right there, and the net low right below it. And then you get the point. So this is probably be your only trade you could safely take, in which could put a little short position right there. And then put the stop right there and then target the equilibrium. I'm like, JJ, that's impossible. You can't take a big trade like that. That there's no way. There's no way, JJ. Look, no, that's not possible. Well, look, I don't script these videos. I don't have like a big sheet of paper that I'm reading above my head that says go to August 14th and mark out the liquidity void while marking out the midnight opening price. I just whip something out and look at that. Look at that precision, which is right at the equilibrium of that liquidity void. That this isn't random. That definitely not random, right? This is very scripted, super duper scripted. Like I'm super unprofitable. Anyway, that's the midnight opening price. And sometimes what you can do If you miss your entry, not what you can do, but what is advised to do, if you miss your entry, for example, at the high of day or just in a premium, right? And let's say price is going down, going down, going down, going down, right? When we get around the midnight opening price, price can do two things. It can go below it and then retrace back into it to drop lower. Not saying that you use the midnight opening price as an entry. Do not do that. Don't do that. You wouldn't have a stop loss then. There would be no such thing as a stop loss. You would just be losing money for no reason. So if you do see that it's coming back up to the midnight opening price and respecting it, you can use that as a confluence to take an entry or to find a setup. Simple, right? In which we actually do see that here. If we go to the 5 minute, it's a bit cleaner. Where is it at? Oh yeah, there it is, right around here. So guess what? Drops below the midnight opening price, comes back in, consolidates around it a little bit, and then once that 1050 to 1110 macro comes in, it starts displacing away from it. Okay, so it's a lot of time and influences, and just a lot of time and price behind this, just this entire day, really. A lot of time and price involved in it. And then as you can see, the price part would be targeting, the equilibrium of that liquidity void because the liquidity void is just way too large to target the bottom. And then it's a Friday. Come on, it's a Friday. And then we had that massive move there. So potential TGIF. It's just common sense. And then actually, look at that. We closed right at the midnight opening price. How beautiful is that? See that? Right there, closed right there. Anyway, that's midnight opening price. Now, we're going to use this same day, but 8:30. So let's go down to the 1 minute. And where is 8:30? Where is 8:30 at? It is right there. So drag that all the way out. I'm just going to keep it yellow. Uh, there we go. It's yellow now. Okay, perfect. So at 8:30, we start to rally up. We consolidate. So we kind of sort of manipulate and consolidate in the same area because if you just look right before 8:30 kicks in, we start rallying up. We engineer buy side here. We accumulate. We purge the buy side. So we've officially accumulated and manipulated, and then we've started to distribute. Distribute really, really early, of course. But you're probably like, why is it so choppy? Why? Remember, I just said it's August price action. August price action is normally like this. You can't expect anything good out of it, especially if it's a CPI or non-farm payroll week. You might as well just call off for the week. No matter if it pumps 300 points, if you look at that price action, the price action on the 1 minute would probably look atrocious. So you can clearly see that let me zoom in on this, my bad. You can clearly see that we've, began to expand. We engineer liquidity. We accumulated. We manipulated. Okay. And then we distributed. Okay. Now, normally, the textbook version of a power of three interpretation with opening prices is you would see the accumulation normally occur right at the opening price, like literally in the same area, parameter, or distance, or proximity, whatever you want to say. It'll normally accumulate within the same area of the opening price or very, very close to it, which, 20 points away is pretty close. So we accumulated, then we manipulated. The manipulation is supposed to come above the opening price. Okay, so if we have a bias of bearish on the day or we're looking for some bearish distribution, you'd want to see the manipulation be above the opening price and a distribution go below the opening price. Super simple, right? As you can see, we accumulate pretty close around the opening price. So we accumulate, we manipulate, those equal highs there. See that? Those, let me put a liquidity purge thingy right there so you can see it. So I can help you out. There you go. Liquidity purge. So we accumulate, liquidity purge, close below it. Then we start to drop lower and distribute below. Look at that, below the opening price. See that? Super, super duper simple. Now, well, let's apply the new week opening price to that. What's the word? To the entire week. So probably the hourly will be the best thing to do. I think the hourly. Let me see the 4 hour. Yeah, no, the hourly would definitely be the best to look at that at. So where is this week? Okay, here's the entire week. My bad, I'm having a little bit of brain fog. Okay. So new week opening price should be Sunday at 6. Oh, is it this candle? Yep, it is that candle right there. So we drag that all the way out. Boom. Boom, boom, bam. So looky here. We have, wait, where's, I can just set it as new week or midnight opening price and then set it as new week opening price. Bang, there it is. So look around here. Okay. Let me go ahead and delete this stuff over here. Do I have anything else? Nope, no more drawings. Okay. So remember how I said the accumulation is supposed to happen in pretty close proximity to the opening price, in which, look at that, we do have that accumulation, in which that's why people say Mondays are usually BS, where it just doesn't move because you have this new week opening price in play. And when you have that in play, the algorithm is interpreting the whole week as power of three. It's doing that. So no matter if you interpret it as manipulation templates, if you interpret it as it's manipulating into an inversion fair value gap, which I don't know why people on TikTok say that. I don't understand it. But of course, you have the accumulation. You have the manipulation, which is below the new week opening price. Okay. Since it's below it, that means you were expecting what? Distribution higher, right? Super simple. So we have that accumulation. We have that manipulation, purging all these lows here. And then that low there, which is, I think, what's the word? Non-farm payroll low or something like that. I'm not going to call it a data low because they're just inventing a new concept, but the low of non-farm payroll or just the day of non-farm payroll. So we've manipulated, we've accumulated, in which go ahead and draw that out as a liquidity purge right there. And then look at that. Around Wednesday or Tuesday night. Well, no, what's that? Is that Tuesday night? Yeah, Tuesday night we begin to reverse and obviously distribute, in which we accumulate around the new week opening price once again, in which I did tell you if it goes above the new week opening price, there's a chance it can come back down into it, retrace around it or back into it basically, accumulate around it, and then distribute back higher, in which that's exactly what happens. We go above it to begin distributing. Once we get above it, the day is basically over with, right? And we don't really want to go higher. So we go back into the new week opening price, accumulate some more, accumulate some more, accumulate some more. Okay. And then we have that kaboom because we accumulated for what? Let's see here. Accumulated for basically an entire day, starting from this candle. Yeah, basically one day of accumulation. So that's enough accumulation to see a strong, liquidity void like this get created. See that just massive, just pure delivery. It was a beautiful day, honestly. I traded this day. Very, very easy. Super duper duper easy. But anyway, 17-minute, 20-second recording of opening prices. I think I taught you pretty well on this. This is like my 17th attempt trying to record this, so I'm glad I finally got some sort of a good example to show you this because Jesus, I mean, this is kind of perfect to show you because August price action is so consolidating and manipulation-y and just disobedient in general. But anyway, enough of me yapping. This is the end of opening prices, and hope I see you in the next one. Good luck and good trading.